Hello, this is the Chart Profit webcast. We're just under 3 hours before the close on Friday 28th of August. Posted a video pre-open a couple of days ago where we talked about the tremendous sell-off, the selling, this level here at 1870, hopefully support. Subsequently seen quite a rally. We'll have a look in a second where that's taken us to. Let's just step back, look at the big picture. We had some warning for quite a few weeks on the breadth system when we look at all the market charts here at the front of the ebook, and we can see that from way back, actually before this, the breadth numbers within the sell in the main below 50. In fact, I think almost all below 50. That's percentage stocks greater than their 50-day moving average, indicates weakness. And the chart profit breadth system showing these red color all the way down. So breadth has not been supported for quite a while. So you can see here on the New York, all of this are weekly bars. All of these are red. And the Nasdaq, all the way back to sort of early June. And as I keep pointing out, this yellow indicator here, which is the 5-day moving average of the net new highs 25 indicator, below 0, not supportive, and this indicator at the bottom below 50 from way back, that's the percentage stocks greater than their 50-day moving average. So you can see from June we've had really poor breadth across this section, and we've just seen kind of resolution to this, I suppose, where we've just sold off really sharply. But as I've said pre-open day after day that these numbers here are not supportive. This chart we've looked at once or twice in the past. It's a color study based on this indicator, which is a 13-week moving average of the low price. The red bars indicate where the previous week closed below that level. If you're being really cautious and you're a longer term investor, you really want to see some green on this chart, and you don't want to see the close below that level. And if you do see a close below that level, you want to see recovery pretty quickly. Here on this weekly chart from 2012, this can indicate real problems where the moving average turns over and we remain below it. We recovered here. On the close of this week, it's very likely that this bar will turn red, indicating that the previous week closed below that moving average, and it's kind of turning over. So there's plenty of reasons to remain cautious, but we've had this tremendous rally, which I want to talk about. So in the pre-open today, I mentioned that large caps, that would be the SPDR, and I also mentioned here the E-mini S&P, which we're looking at over here. Large caps are outperforming the small caps, and they've reached their half range levels of this year's high. And I've dashed lined this in on the chart here. Comes in at 1978.50. That's for the E-mini, and for the SPDR it's 198.10. So here we are first of all on the E-mini, and that level I just mentioned is this dashed line here. And you can see we're printing very close to it. If we see more time printed above this level, that would be actually very strong price location. We always draw in the half range from an important high to a low on any time frame. Here on the daily chart, in a bear market or a bear move, this is often here or hereabouts, is often the point where the market turns over. So we need to monitor these half range points where we can find them quite closely, and this will be a key chart, obviously the E-mini and also the SPDR SPY. Let's see how we fare going into next week with regards to these levels. Other positives would be, for instance, here on the profile chart, be good to see some green, some significant buying, especially above that level, that half range. We've come an awfully long way back here without, thus far at least, marking significant buying, which would be indicated with a green color, as you know. And another positive would be this central line here, the daily breadth indications turning back to green like it was over here. But as I mentioned, since late May, this has been giving an indication of weakness in the breadth. So obviously we're trying to figure out, is this a really violent counter trend rally in a market where the main trend is down, or has this whole sell-off over the past couple of weeks been a necessary shakeout to shake out the weak hands in an ongoing bull market? It's a big question. I haven't got a big answer. I've got lots of little answers, and that's the best way to view it, I think. We just have to look for clues on the key charts, one of which is the SPDR holding above that level. Just going to mention again on this chart, this level here, 187.80, is the second most important point of control on this chart. The most important up here, when we dip below it, we know we're in a weak price location, but we recovered pretty quickly back above this important time support. Now the only point here is that if, and it's a big if, this chart turns over again and we see price down here, as I said in the last video, this is likely another leg of the bear market here. We pretty much know by then that we're in one. We often hear that these V-shaped lows are unusual, and a retest is common. I think if we see a retest down here, would be an extremely weak price location. That would severely worry me. A retest of this level would be fine. Okay, so the large caps outperforming relatively the small caps. This is the Russell 2000 ETF IWM. There's a big level, as we know. We've been monitoring this for many months. This 116 level. This is the major point of control on this chart. So two clues from this chart. If we turn down from there, that would be a bit of a negative indication. If we print some time above, I'll take that a further tick on the positive list. Diamonds has also done well. Large cap diamonds almost retraced to its halfway point, which is here. This line here. We'll be watching that level into next week. Just monitoring those levels on those three stock index ETFs will be extremely useful. This is the half range of the 07 high on the technology sector, XLK. A really violent recovery of that level. So again, secondary chart maybe, but price down here would be unhealthy. And same thing with the financials. We've been watching this level here, major level, and we've recovered. Let's just quickly review the sentiment. The RIDEX ratio down here, just over 6. This week has hit its lowest level since October, back over here. We've had a much more violent sell-off than we did in September, October. We haven't reached as low as this, but we have hit a 10-month low here. Bear fund assets earlier in the week spiked up to their highest level again from October, but these have been higher. Similar picture here in the bull fund assets that I follow. We haven't quite reached as low as that, but we have hit a 10-month low. This week in the public poll, we've seen bulls percentage higher at 32.5. Bears percentage was also higher this week at 38.3. Gives us a net, you can see, just below 0 here. And the 4-week moving average, as we know, hit its lowest level a couple of weeks ago since April 2013. We've got the Investors Intelligence poll hitting quite extreme low levels down here, but how useful this data is, not sure. We've had quite a violent bounce from there. But the bulls minus bears net is at its lowest since June 2012. The 4-week moving average of that net is at 18.67. That's the lowest since September 2013. So been a very clear increase in bearish sentiment over the last couple of weeks, obviously. Also seeing it in the exposure index this week. This is the money managers current equity exposure, and that's fallen quite violently as well, down to this level that I always draw in, around 30. We've just dipped under that, as we did back here, and as we did just about back here, and as we did in 2011. A little less clear the indication at that point regarding sentiment being at a sort of contrarian, pessimistic level. We saw a sell-off after we first dipped below that level. Nevertheless, the public, the Investors Intelligence, the money managers are all pretty bearish, very bearish. And also in the Lipper US fund flows, we saw an outflow, net outflow of $17.8 billion in the week to Wednesday. That's the largest single weekly outflow since December. And this 4-week flow in yellow here, getting down to levels that we've seen at the bottom of corrections in this bull run that we've had. After showing you all that, I'm just going to say that there is some fuel obviously here. Much more important from a timing basis is the analysis that we looked at the start of the video. Short-term breadth numbers, significant buying coming in, price overcoming those important levels. So we take it step by step. Okay, we'll look at bonds now. As you know, I only use two levels on my chart, so these being time support resistance levels or controlling prices and halfway points. So a quick review, T-bonds TLT. We saw quite a decline the first 6 months of the year down to June. This was the major support, the major point of control at 117.14, and if we'd seen lower highs below here or lots of time spent below that level, that would have been really weak. Instead of that, we oscillated around it and then we came back up off that support. So from this high to this low, we mark in the resistance, which comes in here, and we saw a probe above it, which intraday really didn't last that long. So we've tested that halfway point and that's actually rejected it down, but the halfway point from this low to this subsequent high comes in here, and that's where we're currently finding support. So again, I'll just use these levels short term, long term. Price down here going into next week would indicate a weakness in the short term, and I would at that point anticipate a test of that level. Price down here, weak price location in the longer term. Quick review of gold. This is GLD, Gold Trust ETF. Just a quick review of what happened here. This is the major point of control on the chart. Early in the year we saw a probe up into that level which was rejected. We saw this sell-off back down to the previous low. We then have from that low to that high we have the halfway point, and we found kind of like a double top there, and then we saw weakness down to a new low, and that was triggered by this little test here of this 24-month point of control, which we talked about at the time, down to the new low. As I've gone through in the pre-open and in previous webcasts, this level here on weekly, monthly, yearly charts is an extremely important support. So I'm kind of encouraged that gold, both here and on the cash, has found support. This being the most important level on the chart. If we see price below this, gold's, I think, going to take another leg down. Right now in the short term, we look at the halfway point off here to here, and it comes in here. So in the short term, we're in a stronger price location. Going into next week, despite all the talk about sentiment being so overly bearish, my point is if we see price here, I would be expecting a test of that low. Longer term, first indication of strength for me comes in above here, above 115. Similar analysis for the dollar index, which has recovered off this low. We have a 12-month point of control at 95.22. We've recovered that, but we now have a new level. This halfway point changed when we broke to a new low below this one, so the new level is here. So in the longer term, we can say we're in a stronger price location above there. This would be weak, and that would be stronger. Okay, that's a sort of strength that we're seeing coming back into the dollar and the dollar index there, also reflected. I'm going to go quickly through these charts, in these three charts as well. So this is the Australian. We spoke about this major support. Sorry to go over it again. This is tremendously important support here. It's the major point of control at spot 76. And when we broke below it there, we've seen a sell-off. And not until this chart gets above that level, back above that level, is there any sign of strength for the Aussie dollar from my way of looking at things here. This is the pound. I talked about tremendous overhead resistance on this chart for months, and this came back into play here. This 12-month, we did spike above it, but there's just a lot of levels here which are really important, and I want to see a higher low somewhere above here. We haven't seen it yet. Finally, the Euro FX chart. This was encouraging mid-August here, above the 12-month. We're back below it, and we now have a new level here, which is the halfway point from here to here. Price below that level now would suggest a retest. So it looks like strength for the dollar, even more so if the dollar index can get above its halfway point. Okay, what a week. A lot of information there in that video. I'll do my best to see that in the pre-opens next week. Thanks for watching.